Hi, this is Cathy with CallCathy.com. Love your home, love your neighborhood. Today we're doing another lender spotlight. I'm with Keith Brown of Intercoastal Mortgage, one of our favorite lenders. And you're welcome, Keith. He's definitely earned it because he by far has been the lender choice of our clients. We always like to give them a few to choose from, and it's our clients that have voted Keith number one within our team. So anyhow, Keith, tell us what's going on in the market today.
Sure. So last week was a big change in the market. We had the inflation report come out for the year ending in May. And as everybody's aware, because it's constantly in the papers, we've seen inflation go from what was 7.8% at the end of April now to 8.2%. We've all seen gas prices go up over $5 a gallon, becoming very common. With the increases that we saw, the markets kind of panicked. You saw the stock market go down by almost 10% plus. On the mortgage rate side, literally in 2 days, between last Monday, last Tuesday, we saw mortgage rates increase by 0.625% in rate. We basically went overnight from a rate that was running around 5.5, 5.625 to the low sixes. Shocking that could occur that fast. Probably the single largest increase in 2 days that I can remember in the 27 years I've been doing this. The Fed, of course, followed suit on that Wednesday and did increase the rates 3/4 in rate. And that's what got everybody's attention. But the market had already priced that in because they were expecting this. They said, well, the increase in inflation, being that it got worse and not better, made rates increase even faster. Now, since then, it's been kind of interesting because after we hit our high point on last Wednesday, the rates have started coming back a little bit. So now we have gotten back into the mid fives to upper fives, depending upon if you want to buy the rate down or not. But we're still about 3/8 in rate better than what we were at the height of the market just literally a little over 1 week ago. This kind of piggybacks off what we saw in April. In April, we had an inflation report come out around the middle of the month. The Fed reacted, rates shot up, and the rates came right back down. Now, the big unknown now is what's going to happen in July, because guess what? There's going to be another inflation report in July for the year ending in June. And if that inflation report still shows inflation worse than what it was in May, we'll probably expect to see another sudden increase in the mortgage rates, followed by another Fed reaction, and then probably followed by another slight decline. The problem is each of these increases are pushing the rates above what they were on average the month prior. So we're still in this increasing market right now. And we don't know when or if it's going to get better anytime soon.
So, and what are you seeing with the pre-approvals that you're getting and the offers that you're seeing from other agents that you're working with?
So the market is kind of interesting because one thing about a market, as you know, is this market is, constantly have people that are moving into the market and moving out of the market because of their jobs or job opportunities. One thing I'm noticing is that a lot more of the pre-approvals I'm doing right now are clients that are moving into this market. You know, they're moving from other areas of the country and they need to buy a house when they come here. Oftentimes they're selling their home wherever they're coming from. You have a client, for example, in Texas that's selling his home in Texas that's relocating out here with the federal government. The listing that was just recently sold yesterday, we're doing the mortgage on, military orders. So one thing nice about our market is we always have people that are moving out that have to sell their homes, and we always have people coming in. So we're still seeing a good number of buyers out there. And yeah, the rates are high, absolutely, compared to what we were just a few months ago. But again, this is a high income area. No matter how we look at it, people in this area tend to make a lot more money. And because they make a lot more money, yeah, the rate is an inconvenience. Nobody wants to pay an extra $200, $300, $400 a month on their mortgage payment than they originally were expecting. But most people generally can afford it in this marketplace. You know, obviously what we're not seeing a lot of first-time buyers right now. I can't remember, it's been a while since I've done a true first-time buyer. You know, but right now, again, we're seeing a ton of move-in buyers moving into our area.
Yes, yes. And that is so correct, Keith. And from just my personal experience, I recently had a buyer, as on the listing side, because I look at multiple buyer lender approvals, I'm always screening the lenders that submit offers for the buyers that submit offers. And I was surprised that one of the lenders point blank said that they just did a verbal pre-approval. And so an interesting fact that I found out is that 30% of lender pre-approvals are actually not real approvals. So
Correct.
it's still so important to make sure that we are working with a great lender, a lender that's going to gather the proper documentation, especially with today's rates and just with the increased home values and some buyer remorse, right? So just to make sure that we're really on top of everything on the listing side. And on a different note too, we're still seeing multiple offers. Last weekend we had 2 houses that had offers at where our home sales actually increased above the listing price by $25,000 to $100,000. So it is an active market. It's a tough market, but we're not seeing as many offers. So when we used to have 10 to 12 offers, we're now seeing 3 to 7.
Right.
And sometimes just one really good one. So it's still a really healthy market, which I'm really grateful to be working in this market. Anything else, Keith, that you'd like to add?
Only that what we're telling the clients that are getting these really high rates right now, Cathy, is that rates are cyclical. We're definitely at the highest levels we've seen since 2007 right now. But rates go up, they go down. We are going to probably get pushed into a recession at some point. Hopefully they do get inflation under control. And when that occurs, the Fed will be forced then to start reducing the rates to try and get us out of the recession. And we might see rates start to fall back. And so we're telling clients right now, hey, yes, you're at a rate that's mid to upper 5s right now, but you're probably going to have an opportunity to refinance out of this higher rate within 1, 2, 3, certainly no later than 4 years. And you might even refinance multiple times. We've had many cases where where the clients might refinance when they first get down to the upper 4s, then they might refinance when they get down to the upper 3s. So the rates that people are getting right now, I don't think those folks are going to be stuck with those rates for the next 30 years, the length of their loan. They're probably in the next near term, a couple years, going to be able to get those to something a lot better. And it's still better to buy a house and own now, because house values are still appreciating, maybe not the 20% per year we've gotten used to for the last 3 years, but a healthy real estate market is considered 2 to 4%. And if you got even on a $500,000 house, 4% increase is still a $20,000 increase. If you don't buy now and wait 2 years, that house is still going to be worth maybe $40,000, $60,000, $100,000 more. So buy now, make the rate work. There's going to be an opportunity probably to get something better.
Great. Thank you so much, Keith. We really appreciate your time. And thanks again for listening to us here on our Real Estate Knowledge Short. And I'm Cathy with CallCathy.com. Love your home, love your neighborhood. And this is Keith Brown at Intercoastal Mortgage. Keith, how do people reach out to you?
People can reach out to me anytime on my cell phone. Text 703-929-5274.
Thank you, Keith.
Thanks.